Welcome to my channel. I'm Scott, and in this video we're going to talk about Palantir. They recently released their fourth quarter earnings and their stock went through the roof. Let me give you the high level on Palantir and then we'll look at their fourth quarter earnings. So their market cap is currently $19 billion, and a lot of people don't really know what Palantir does. They specialize in big data analytics. Big data analytics is the use of advanced analytic techniques against very large, diverse data sets. And usually the data sets come from many different sources, but Palantir puts all the data into one platform, making it easy for the end user to look at. Let me give you some examples of what they do. They conduct counterterrorism analytics with the US intelligence and the Department of Defense. They also work with companies like L3Harris and Huntington Ingalls. Some of its current clients are Morgan Stanley, Merck, Airbus, and Chrysler. An example of something they do is helping car manufacturers manage logistics and operations. They work with the National Health Service in the UK. They also work with the National Institutes of Health, which is part of the US Department of Health and Human Services. It helps fintech companies reduce money laundering from crypto transactions. They're headquartered in Denver, Colorado, and founded in 2003. Let's look at their PowerPoint presentation they put on their websites. This is in regards to their 2022 earnings. The company has positive net income for the first time in their history. That's a really big deal. That was in the fourth quarter of 2022, not for the full year of 2022. Their earnings per share is 1 cent. Even though that's a small dollar amount, it's a big deal when you hit that break-even and profitability point. Because once you cover your fixed costs, your margins go up faster. You become more profitable. So that's a really big hurdle they got past. Revenue grew 18% quarter over quarter. It's now $509 million in the fourth quarter of 2022. The US government revenue grew 22% to $225 million in the fourth quarter. Adjusted operating margins of 22%. Operating margin is operating profit over revenue. It's how well you convert revenue into operating profit. They closed 261 deals in 4Q22 compared to 217 in 4Q 2021. That's a 20% jump. Some companies like Starbucks have millions of customers visiting their stores every day. But a company like this only needs a few hundred customers to become profitable and to become a viable business. In 2022, US revenue grew to $1.2 billion, up 32% from 2021. Commercial US revenue grew 67%. Overall revenue grew 24% year over year. It's up to $1.9 billion. And their customer counts have gone up 55% to 367 from 237. And they closed almost 1,000 deals in 2022, up 61% from 605 in 2021. In the fourth quarter of 2022, they had their first FoundryCon. This is a way for them to market their products and services to different customers. It looks like they had a bunch of big sponsors: Cisco, Avis, RBC. There was an article about FoundryCon. Here are some highlights. In their first FoundryCon, they had 6 customers share their experiences and successes. So like I said, it's a great way for them to market and get new customers. So it's good to see they're trying to actively increase their brand awareness. They're trying to communicate tangible value for their 3 platforms. Those 3 platforms are Gotham, Metropolis, and Apollo. In the fourth quarter, they closed 55 deals of at least $1 million. 11 of those were $5 million, and 5 were 10 plus million. So they work a lot with the US government, a lot of different areas of the US government. And that's like guaranteed revenue, because the US government has really deep pockets. And if you get in good with them, the sky's really the limit. They had their highest gross margins at 82%. It was up from 80% in the third quarter of 2022. Gross margin is gross profit over revenue. It's how well you convert revenue into gross profit. They use adjusted gross margin, so they strip out stock-based compensation. This is the company's stock price historically. It looks like they may have started as a SPAC because they were $10 a share at IPO. Although I don't remember reading that they were a SPAC initially. There was lots of excitement when the company IPO'd, especially that they had Peter Thiel on the board. He's one of the early investors in Facebook, Meta. and the stock went up to over $35 a share after a few months. You can see it's really struggled. It fell to about 50% of its IPO price, but now it's back up to about IPO price. Here's the stock price year to date. So you can see it's done really well this year. It was under $6 a share. Then it jumped up to over $10 a few weeks ago. It's regressed a little, but I think there's definite potential for this stock to get back up to its all-time highs. You could see these green lines on their earnings release. The stock really shot up. When you see a green line, that means there's more buyers than sellers, and the stock price goes up. A lot of buying. When there's a red line, there's more sellers than buyers, and the stock goes down. The red lines are kind of small relative to the green lines. So the stock is up overall since their earnings release, quite a bit. And it could regress back down to where it was before the earnings release, only time will tell. As you can imagine, short sellers have been making a lot of money on this stock. Over $1 billion in paper profits. Paper profits means it's still on paper, they haven't satisfied the loss and taken in any money. And I think what's really moving the stock price, which I didn't really realize until today, is they invest a lot in SPACs. Which is kind of odd for this company because they're not an investment company like Berkshire Hathaway. They provide a service. Their company isn't to invest in other companies. But they have been investing between 10 and 40 million in a lot of SPACs. And as you know, SPACs tend to do really poorly. So if their investments do poorly, so will this company's stock price. Even if this company's revenue and profits are strong, part of their balance sheet are these investments. Let's look at their financials. This is their income statement, their P&L. So you can see in the fourth quarter of 2022, 508 million of revenue, up from 430 million. For 2021, it was 1.5 billion, now it's 1.9 billion. Their cost of revenue went up a little bit, so their gross profit in the fourth quarter is 404 million compared to 345 million. So it looks like they're more profitable. Their margins are higher. Below that is their operating expenses. These are all the expenses not directly related to generating the revenue from the services. Sales and marketing, 190 million, up a bit from 160 million. R&D is pretty much flat. G&A went down a bit from 157 million to 149 million. So their operating expenses are up a bit from 400 million to 422 million. So they actually have an operating loss of 17.8 million. Even though the company said they had their first profitable quarter, because there's more things below operating income. They generated 12.7 million of interest. This is interest they earned from their investments. And they also have 44 million of other income and expenses. These are probably paper gains on their investments, their SPAC investments. That's why the company did say they had positive net income. But this is a more telling number, operating income, in their case operating loss, and they did have a loss. But it was better than last year. They had a loss of 59 million, now it's a loss of 18 million. And a lot better in 2022, $160 million loss compared to a $411 million loss. Because sometimes companies wait for a certain quarter to book revenue, or maybe push off certain expenses to the following quarter, so it makes their numbers look better. So they're really marketing profitability for the first time ever. Although it is true, it looks a little skewed. And this is their balance sheet in 2021 compared to 2022. Cash is up from 2.3 billion to 2.6 billion. That's a good amount of cash for a company with 19 billion market cap. Their receivables are up a little bit also. So current assets are pretty much flat, about 3 billion from last year, but much higher than current liabilities of 600 million. They don't have much in non-current assets because they're a technology company. If they were a manufacturing company, they would have a lot in this category because they would have factories and equipment. That stuff is pretty minimal. They do have 200 million of operating leases. Right of use assets means they're leasing an asset that's owned by another company. So they do carry it on their balance sheet as if they owned it. That's why we see this $200 million here. And you should see a similar amount in liabilities, 204 million on operating lease liabilities. This is how much they owe on those leases. The 200 million is the value of the asset, the actual machine or building or whatever the asset is. and this is what they owe. So for balance sheet purposes, right-of-use assets is usually a wash. Their accumulated deficit, which is a sum of all their prior net incomes, is their historical profitability, is negative 5.9 billion, which is worse than 2021 of negative 5.5 billion. But their only time they were profitable was in the fourth quarter of 2022, not all of 2022. So they do have positive 2.6 billion of equity. Equity is total assets minus total liabilities. How could they have positive equity when they're running a loss? Well, because they sell lots of stock. They generated 8.4 billion from selling stock. And they're debt-free, so they don't have to worry about any debt payments. But technology companies tend to be debt-free because they don't have to build out lots of infrastructure like an oil and gas company or a manufacturing company. It's mainly payroll. And let's just close it out with the statement of cash flows. And I think that's the most important financial statement, is statement of cash flows. So operating cash flow was positive in 2021, 330 million, and it's gotten a little worse. It's 220 million in 2022. They did generate positive cash flow in 2021, but they reported negative net income. Lots of non-cash expenses, almost 800 million in stock-based compensation. That went down to 560 million. They had a cash outflow of 400 million in investing activities, only 45 million in 2022. They spent a lot on marketable securities, all those SPACs, 300 million in 2021, 125 million in 2022. And they paid off all their debt in 2021, 200 million. Now they have no debt to worry about. They brought in $500 million from options in 2021, 100 million in 2022. So when you sum up cash flow from operations, investing and financing, they had a cash inflow of 260 million compared to last year of 240 million. So this stock really seems to be a hit or miss. It went down about 80 or 90% since its peak, but it looks like it's coming back up. And they have lots of smart people back in the company and running the company. So hope you learned something new. Like, subscribe, comment. Talk to you soon.